Time for our crypto report now, with Bitcoin, of course, extending losses, even dropping below, well, almost 30,000 at one point on Monday. This is the first time it goes this low since back in July 2021, putting its decline from a November record high to more than 50%. Our crypto contributor, Sonali Basak, is here with more brutal selling pressure.
Brutal selling pressure. And you take a look over here, Caroline, we've been talking about this 1 year merry-go-round that crypto investors have really gone through, and Bitcoin being the brunt of that, the biggest cryptocurrency here. And you look at where we've gone more than 10% lower over the last couple of days, now getting a little bit of lift above 31,000 again. You and I have talked to Mike Novogratz a little bit earlier today with a real worry that they could fall below 30,000 if the NASDAQ also continued to decline. That is the low that he expects. Listen, but it's not just Bitcoin that we want to talk about, although there is a lot of momentum in that downward pressure there you see over the last couple of days. Let's talk about other cryptocurrencies, even stable coins. A lot of worry that you see over there with UST being unpegged to the dollar. I want to pull up this tweet from investor Jim Bianco of Bianco Research, and the worry that UST down more than 4% and under 96 cents at one point, the worry that a downward move in a stable coin like that can cause...
Backed by Bitcoin.
Backed by Bitcoin, exactly. The most important part there. Is there more selling that needs to be done to peg that stablecoin to the dollar? So there's a lot of worries here about how one asset will correlate to another asset. And let's take a listen here of what Mike Novogratz had to say about the selling pressure.
We were 40,000 literally just a week ago. And so the pace of this move has been severe, right? It's correlated with the risk off that you're seeing in all assets, right? The rise of the dollar. And so I still think 30,000 should hold. Right, we'll see if 12,000 holds the NASDAQ and we bounce in the next few days, then I think you'll see Bitcoin 30,000 will hold. If the NASDAQ falls and we head towards 11,000, there's a shot that 30,000 goes. I would tell you, getting away from price, which is hard to do in a day when the market's down 10%, it's really interesting if you just look back at all the adoption that's happened this year. I mean, the first quarter alone, venture funds have put $14 billion into the ecosystem. And so this is an asset class, right? Blockchain, digital assets, Bitcoin, that is getting tremendous investment, tremendous interest. And so while the short-term, outlook is painful, it's going to be, like I said, volatile with the rest of assets as the Fed adjusts from free money to normalized conditions. My medium-term conviction hasn't wavered. I really do still see this as a very exciting asset class with a lot of momentum.
And Mike, in for correlation, because I think that was the main hope, the prayer, the saying that was going to these institutional investors that have come into crypto, is that this is a non-correlated asset. But thus far, it's very correlated, in large part, probably because more institutional players have come in and they're having to sell as they see the NASDAQ go down.
Listen, it had less correlation until there was free money forever, right? The correlation increased dramatically after COVID because every central bank took a fire hose of liquidity and sprayed it on the tarmac. And so it made all assets. You could look at the correlation of, fine wines or baseball cards or any collectible to the NASDAQ to assets. And so we're unwinding this era of free money. And so it's not surprising to me that Bitcoin, which was a hedge against free money, is selling off. I do think those correlations will break down or will lessen the moment we find some stability in the market. But right now, if you're an investor, you've got 100 fires to put out. Did you overcommit to venture? Do you have enough liquidity to pay your private equity commitments? Oh my goodness, I used to be in risk parity. That doesn't seem to be working at all anymore. And so very few people want to put on new risk in a moment of this kind of tumult. And so I think once the tumult stops, I think that's a word, tumult. Once the chaos stops, then I think you're going to see the allocators who have been doing all their homework. Listen, I just went around the country and to a bunch of conferences. I am wildly convicted that there's infrastructure being put in place to bring lots of capital into the space.
Yeah.
So again, it's surviving this unwind that investors have to manage.
When you talk about the unwind, though, Mike, you seem to be talking about a lot of people that maybe just saw the opportunity here. These weren't sort of the early adopters. These weren't necessarily the crypto faithful, if you will, at least not in the traditional sense here. For those crypto faithful out there here, do they look at this type of market and think you add to positions, you buy into this dip, or do you just kind of stay the course and wait for whatever shakeout is happening to end?
Listen, for the guys who have been in crypto a long time, longer than me, this is par for the course. For most people who manage institutional money or manage lots of money, this is unbelievably painful. And so you use the same kind of risk analysis you do when you're trading other assets, right? I would tell you, though, that the new institutional players that are coming in with a very long-term focus. I mean, and you can put BlackRock and Blackstone and Citadel and Apollo into that bucket, right? Those are four of the biggest names in investing, and that they're getting in, right? They're working on infrastructure and trying to help create institutional frameworks to bring their clients in. And so I don't think this asset class is going away because we've had a 50% sell-off.
Oh, your clients, your analysts today have been asking you about the recession probabilities and how you prepare for that. How do you prepare for that?
So I think we are going to go into a recession. In some ways, that will be good for crypto because it will finally get interest rates calm and down again. Like, I'm sure we'll have crypto adoption both from investors. We're already seeing it with companies, right? So, but asset classes prices always get ahead of where the actual, building of a company is, right? Tesla wasn't even selling cars, and they had a decent market cap. And so you got to keep the story up until you can build product that then generates the revenue. That's the process that's happening in crypto. And so what crypto needs is stability in the non-crypto markets. At that point, you'll see stability in crypto and you'll see fast adoption.
And Caroline, that was, of course, Galaxy Digital's Mike Novogratz. Galaxy Digital, MicroStrategy, both of these companies dropped more than 25% today in the market. So you see that crypto decline actually exacerbated a lot more in those firms exposed to cryptocurrencies.
Talk to us about exacerbating. Do you think that the pressure with Luna and the fact that a Bitcoin-backed stablecoin means that you have more selling pressure on people on their, on their treasury? Is this going to be a really ugly feedback loop?
That's the big concern here, that there could be ripple effects across DeFi markets. The question is, how low does that peg have to go? How much decoupling does there have to be, and how long does that have to last for the Luna Foundation, for UST to keep on having to sell Bitcoin into that decline?